Gold ETF growth fails to stop price falling $140 from all-time high even as real rates hold at negative record. Gold prices fell to one-week lows in US dollar terms on Thursday, extending a drop that's come even as US interest rates lagged the pace of inflation by a record margin, and despite repeated investor inflows to gold-backed ETF trust funds. Twice touching $1,927 in London trade today, the gold price fell as the US dollar rose to one-week highs on the currency market, before bouncing $10 per ounce as today's New York session began. Asian and European stock markets meantime followed yesterday's fresh US records higher again, extending this week's rise to new all-time highs in the MSCI World Index. With gold now $140 below the new all-time high of $2,075 set 4 weeks ago, real U.S. bond yields are meantime virtually unchanged, with the interest rate on 10-year TIPS continuing to trade at a record low of -1.08% per annum. Longer term, real yields' negative correlation with gold prices has grown increasingly strong over the last decade, showing an R-squared of nearly 60% on 52-week data across the last 5 years. We continue to see the long-term trend higher, says a trading note from Swiss bank Credit Suisse, reinforced by falling U.S. real yields and a falling U.S. dollar. As a group worldwide, gold ETF trust funds, giving investors exposure to moves in the metal with no ownership, expanded for a sixth session running on Wednesday according to Bloomberg data, needing an additional 5.6 tons of bullion to back their shares in issue. The giant SPDR Gold Trust shrank marginally while cheaper competitor the iShares Gold ETF expanded to a new record. More than twice the size of the IAU, the GLD has now failed to expand for 5 sessions running. Over the 20 sessions since 6 August, when gold bullion's benchmark price peaked at $2,067, the GLD has now expanded only 3 times. Over the 20 sessions leading up to that peak, it grew on 12 trading days, leading one gold ETF promoter to say, "There's no question that demand is driving gold prices right now." Shares in giant miner Barrick are meantime flat from 4 weeks ago, closing last night at $29.61, only 10 cents above the price of 7 August, and erasing last month's pop after legendary investor, and longtime gold naysayer, Warren Buffett took a position in the world's second-largest gold miner for investors in his Berkshire Hathaway conglomerate. Like Barrick, shares in number 1 listed gold miner Newmont, NYSE, NEM, fell today in pre-market trade, sliding 3.3% below their price when gold bullion peaked. Central banks were net sellers of gold as a group in July, according to a blog post from the Mining Industries World Gold Council, whose data show heavy selling from crisis-stricken Venezuela, with Russia and Mongolia trimming their holdings while Kazakhstan, India and Turkey expanded. Crude oil meantime fell with gold prices, losing 2.5% on U.S. benchmark WTI.